All right, hey, Josh here. Hey, let's take a look at actually KeyBank National Association. And we talk about, bank on yourself, the infinite banking concept. Let's see what they're doing with their money. Because banks, they're pretty sharp. So total employees, 16,000, but I want to focus on just a few things. We talk about, do banks own life insurance? And why would they own life insurance? You can see life insurance assets right here, 4 million general account, separate account, hybrid. But if you do 4 million, actually, you got to add some dollar figures and thousands. So actually, it would be, oh my goodness, help me with my math here. It's Friday. So you know what that it would be. Would that be 4 billion, okay? Let's take a look at their real estate holdings. Real estate holdings right here, 45, 1,607, 1,067, and then also their goodwill and other intangibles. So you can see right here, this is a pretty big bank, KeyBank. But let's take another one. Let's see if they're an anomaly, or let's see if other banks participate in that. Let's pull this one up. It won't take me too long, but let me go back out of here. Let's pull up another bank here. I'm based in Ohio, but you can kind of see the trends here. You can see I'm working off of FDIC insurance, FDIC.gov, and this is public information. Anybody can look at this. But the highlight is, why do banks own life insurance? Couple different reasons why they do it. Obviously, they want the leverage. They want to get it on their key employees. Obviously, depending on the structure of that, sometimes they get a tax deductibility. Obviously, tax deferral. There's tax advantages, and there's obviously the money that comes to them if somebody should die tax-free. So there's a lot of different advantages, but you could do the same thing. Maybe not on the scale of an institution that has this kind of money, this kind of assets. But let's take a look at the Huntington National Bank. Let's see what they're doing with their financials. Again, this is FDIC.gov. Anybody can look at this information. But you're going to find here the trend, what they're doing. Let's look some at their financials right here. You can see employees, 14,506. Total assets, 108. Again, let's remember dollar figures and thousands. So let's balloon these numbers up. But if we look at real estate owned, 10 goodwill and other tangible assets right there. So 10,748, 2 million for goodwill. Now if we go down the line item, life insurance assets, 2,481,000, general account, separate account, and a hybrid life. So again, they're doing the same type of strategy. And again, when you have a big corporation, obviously there's tax deductibility issues. Now when you get in the business side of it, from the small business standpoint, depending on how you structure it, that could be applicable. If you're buying it personally, tax deductibility is tough to do, depending on how you set it up. But there's still the tax deferral and also the ability to take advantage use of the law to take tax-free loans and to structure it where you want to go right under the MEC, which is the modified endowment contract or the 7-pay test. Not to get crazy technical here, but these are some concepts that some of the wealthiest institutions are utilizing. I just wanted to show you here. This is the balance sheet. And while we're at this, I'm just looking at, with this economy being crazy right now, just looking at their Tier 1 assets. It looks like they short up their balance sheet. Tier 1 assets, 10. Tier 2. And then derivatives, they still got a lot of money. Boy, they let these banks really play around and do derivatives and so forth. But in this video, I wanted to concentrate really on life insurance and, why are banks using it? But the thing is, you got to know how to structure it, policy design, how you implement it, It's very, very, very key. So stay tuned. I'll be cutting more videos, and till the next time, keep it locked and loaded right here